big changes are coming. By 2026, the Hungarian Tax Authority, that's the NAV, is going to complete a massive transformation. We're talking about a whole new era of tax compliance, one that's driven almost entirely by artificial intelligence. So in this explainer, we're going to break down what this huge AI-driven shift really means for your business.
And here's the bottom line, the number one message you need to take away from this. For most companies, the biggest financial risk you'll face is no longer some big intentional tax fraud. No. The real danger is going to be the slow buildup of small, often totally unintentional, administrative mistakes that are hiding deep inside your data. So, to really get a handle on this, we're going to walk through 5 key areas. We'll kick things off by defining this new concept of Taxation 4.0. Then, we'll peek under the hood at the incredibly powerful data system the NAV has built. From there, we'll dive into their new automated process for flagging issues, explore why even the tiniest errors are now a huge risk, and wrap up with a proactive plan to get your organization ready.
All right, first up, this term Taxation 4.0. What does it actually mean? Let's talk about the major shift in thinking that it represents.
You know, Taxation 4.0 is so much more than just going digital. It's a whole new model, where the tax authorities' work is almost completely automated and run by AI. This totally changes the game, moving compliance away from, looking back at things after the fact, to a real-time data-first enforcement model that can analyze your transactions practically the second they happen. So you might be wondering, how on earth is that real-time model even possible? Well, at the very heart of this new system is the NAV's integrated data platform. You can think of it as a central data brain.
And what's really incredible is just how much data is feeding this AI. It's not just your online invoices anymore. It's pulling in real-time retail data, it's getting construction site presence from the Üvegkapu system, which literally tracks who is on site and when, plus tourism revenue, logistics data, and even international financial information. The NAV is basically building a complete digital footprint of nearly every single economic activity happening in the country.
Okay, so they have all this data. What do they do when they find something that doesn't line up? This is where the brand new data reconciliation procedure comes in. It completely shifts enforcement from a slow manual review process to lightning-fast automated action. The whole process is built for speed and automation. First up, the AI flags a mismatch between 2 or more of its data sources. Second, it automatically fires off an electronic notification to the taxpayer. Third, and this is the kicker, your company gets a very strict 15-day window to respond. And fourth, if you don't resolve it in time, a penalty is automatically slapped on.
And listen, if there is one number that every single CFO needs to burn into their memory, it's this one. 15 days. That's the response window. And it starts the second that electronic notification hits your inbox. And let me be clear, this is not a suggestion. It is a hard, non-negotiable deadline.
And the penalty for not acting? Well, it's just as fast. If you fail to respond within that 15-day window, you're looking at an automatic default penalty, which usually comes in at 300,000 Hungarian forints. Again, this isn't a maybe, it's an automated consequence of inaction.
This table really shows you the difference, crystal clear. That old supportive procedure, that was voluntary. This new data reconciliation, it's mandatory. The deadline is rigid, and the penalty for not responding is automatic. And while you can still self-correct, that responsibility to act within those 15 days is absolute.
So, what is this super smart AI actually looking for? This gets us to the core logic of the entire system. It's built on a concept we can translate as sokichi alteres, which basically means many small discrepancies.
And these are exactly the kinds of errors the system is built to find. We're not talking about some massive fraud here. We're talking about putting in the wrong VAT code, a simple mismatch between dates, a typo in a partner's tax number, or a small inconsistency between your records and your suppliers. The little administrative mistakes that can happen any day in a busy finance department.
In this right here, this is the most important thing to understand. The AI is not looking for one big mistake. It's looking for patterns. It analyzes how often these small errors happen over and over again. A consistent pattern, even of tiny discrepancies, tells the AI that you might have a weakness in your internal controls. And that is what elevates your company's risk profile and makes a full-blown audit way more likely.
So, how do you deal with all this? That brings us to our last section, how to build a proactive compliance plan. The goal here is to change your whole mindset, to stop thinking about being audit-ready and start working on becoming discrepancy-proof.
To really succeed in this new world, you have to be proactive. So, first things first, You absolutely must have one person and a clear protocol ready to handle a 15-day notice. Second, you should be doing your own data checks every single month, comparing your VAT returns against your online invoice data before you even hit submit. Third, you need to regularly audit the quality of your own data. And finally, set up official processes for clearing up data issues with your partners and use dashboards to catch those tiny errors before the NAV's AI ever gets a chance to see them.
This all boils down to one very important question that every single business leader and finance professional needs to be asking themselves right now. Are our internal processes, is our financial administration truly ready for this kind of constant, real-time inspection?
Ultimately, the takeaway is this. The best defense is no longer about cooking up a good story for when an auditor eventually comes knocking. In this new era of Taxation 4.0, the only winning strategy is to build a discrepancy-proof operation, one with such solid processes and such high-quality data that you never even end up on the AI's high-risk list in the first place.